Russia's defense ministry says that Russia will respond to the attacks. Russia says they downed all of the ATACMs and 3 out of 4 of the Storm Shadows, according to the defense ministry.
All right, good morning. You guys hear me?
Russia's defense ministry says that Russia will respond to the attacks. Russia says they downed all of the ATACMs and...
Anybody out there? If you guys can hear me, please let me know. Someone in my trade room, at least, in that Discord channel. I mean, in the YouTube channel.
Scott. Hey, Scott. Scott, we can hear you.
Hello? I heard someone talking there.
Hey, it's... Hey, Scott, it's all good. Enjoy the session.
Okay, you can hear me? Cool. Alright, thanks for everyone for participating there, helping me out. I'll be back in a minute. Thank you, Clarence.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment in Wholesale Senate Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account holder is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all, of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific recommendations. The analysis and setups I share are trades and potential trades that I'm taking for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade within it for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and can potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades whether you want to go long or short. You have the ability to copy the spreadsheet and enter your own values and use mine to confirm zone prices until you're able to draw the zone correctly yourself. The spreadsheet is not telling you which direction to trade as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. All right, good morning. Craziness continues. These markets. Let's see this ridiculous move that I've been waiting forever for, and I missed it yesterday because I was at the cardiologist, and I probably would have had a heart attack watching that anyway. But anyway, huge move down. You know, they're attributing to Powell and saying that they were almost not going to cut, and whatever the reason is. And then there was some bird flu rumors in California, and not rumors, but you never know exactly why, but this is big money just unloading here. So I was surprised that it didn't continue in the European session. That's what usually happens. So any of these areas of sink and bounce, I highly doubt that it's going to retake this entire thing anytime soon, but with these markets you never know. Anyway, a good rule of thumb is when you see these
Bank of
really
England's
high
Governor
volume
Bailey
directional
says the
conviction
path of
bars,
rates is downward,
many
commenting in a
times it'll
broadcast interview
retrace
now.
halfway
YM
point
short validated
and then continue
and
lower.
Q short
So
validated.
watch that halfway point. Again, it's kind of an eyeball. You can figure out the distance between is right around 61.40 down to 59.40, so 200 points, so 100 points up. So I'd say right in this area.
Bank of England's Governor Bailey adds there's a lot of uncertainty in the world.
Gold ice iceberg by GC, 161 contracts.
Short NQ and ES based on the volume events. So this is the great thing about what I'm doing, we're doing, trade room, and you guys watching, using the zone drawer. When stuff's crazy, You sit here, you just follow your plan. You follow.
Bank of England's
the
Governor Bailey
rules
says
around
there's
these
no
volume events, and
groupthink
you
on
put the
the
trades on and
NBC.
off, and you're not panicking like everybody else, not knowing. The volatility is obviously very high. You got the ATR at 9 in ES. You got it at 43
Bailey says I
in
can't say when
retested.
and how much
NASDAQ,
rates will
so
fall.
stuff's whipping around. But when you have this stuff to help you trade, as far as understanding these volume events, understanding the entries and the exits, this is the zone drawer. I'll post this in a little bit. Then you just stay calm and you wait for your setups. So I got this was a ATR retest confirmed. That is the pattern for the bark and lick trade. I did not
Bank
put
of
on a
England's
lick
Bailey
trade at
says
the time
market
because I
rate
didn't really
pricing
see
for
a lot of
February
lick
is a
down here, even though
reasonable
I probably
place.
could have traded to this guy. It's not too far, but I'm just not seeing a lot of liquidity below. So all I have on short and ES right now is the bark trade. And then I have the same on in NASDAQ, but I took that a little earlier. I actually took one pre-market. I got stopped out of it to the tick as usual. And that's, you're rolling the dice trading pre-market, but it did one of those, and then I got stopped out to the tick, and then I got it again and put it on again. So now I'm short bark. The way I trade, the way I trail my
Bank
stops
of
is not
England's
some
Governor Bailey
arbitrary
says we're back in
price
more normal
point
labour
where
market
I'm,
conditions.
trying to not lose back my profit or whatever based on what I want to happen in the market. I trail my stops based
Bailey
on
says
something
should
that's
not
happening in the market.
overinterpret
So,
last wage
new
data.
event, my stop was up here. Now it's here, this yellow line. It's based on that event. So what we talk about all the time is, when you get up prior events, you want to try your best not to stop out in those events, but you have to make a decision. Like in this case, if I want to move my stop
Bailey
above
adding there's a
these
lot of
events,
noise in the
I'm
recent
talking
data.
about 20, 30 points. So I'm not willing to risk that much coming back. So if it stops me out there, it stops me out there. But if you're convinced this market's moving lower, you don't want to get swiped out of it, then move your stop above this event if you're short at these two events. I'd say 81. So in the meantime, we're watching these GEX levels. These are the Method Q levels, and we also have the spot gamma levels. We have trades for these auto entry trades. I'd be very careful taking these. I am watching one of the these two down here. One to get out of some of my shorts. I already got out of one here. Show you real quick. So I pay myself. This is straight out of Trading in the Zone by Mark Douglas. I pay myself, and the market makes money available to me. So you can see here this market when it came down here. I had 6 micros. I got out of one there.
YM short retested.
And actually, I didn't even see this. This was real close to. I would have been out of this full trade. I just missed it because I was getting on the webinar. So most of the time, I will get out of my trades at the major Ludwig levels because these things are so powerful. And once again, you see why we use them. So I just cost myself 70 or 60 points in counting. I would have been out of my full position right there. So I missed that. And you can see another area that I get out. So this is confluence as well. This is point of control right there. Point of control, this market profile composite are real close. So I would have been out of that trade. So now I'm sure it's going to come back and swipe me out of it. And that's my own fault. So a lot of my mistakes lately, or a lot of my losers, have been due to just mistakes, like mental errors. Like yesterday, I blew out a live Apex account, a PA account, because I went to the cardiologist, like I said, and I forgot to cancel my order and crude, and then it ripped against me, and I didn't even know I had it on, and I blew out the account. So it's like a lot of the mistakes. Trading's hard enough. You have to really, really monitor yourself for absent-minded mistakes, and I have not been doing that lately. So it's harder when you're trading by hand, obviously. But if you're going to trade by hand, you got to be on top of stuff. You guys hear all the time, I forget orders in the order book, so on and so forth. So anyway, I would have been out down here, and I was real close to these GEX levels too. So now I'm going to pay the price. My stops here. I got out of a couple, but I didn't get out of all of them, which I would have been out of. So anyway, still have that on. I didn't do anything with the CS short yet as far as exits. I'm sure there's something here too that I missed. Let's take a peek. It did blow right through the lug there, but that's pretty much where I entered. My rule of thumb is usually don't enter into the lugs. I've been getting burned on that lately too. You can ask my trade room on that one. Yep, so I would have been out of some down here too. So these are my areas that I am consistently will get out of some of my trade right there. So I've cost myself 15 points, 12 points in counting on that one too. So that's You can see it's basically right after I got on the webinar. So anyway, my stop for this trade is up here, 97 quarter, and you know, if it comes up and stops me out, I deserve it. I should have been out of, I wouldn't have been out of all of them. That wasn't the blue lug, but I would have been out of at least half of them. So now I pay the price as usual. We do have a new trade here too, called the Back in Black. I posted one on Twitter a couple days ago. Go check it out. So it's when markets tag important areas and they start coming back through these ATRs. This is the 3, or I'm sorry, this was the 2 and the 1. You can take these coming back to the zone because of the propensity for these markets to gravitate back to the volume events are absolutely ridiculous. And we have actually a trade for that. It's called a reversion trade. So there's a trade for every type of trader in my room. We have position trading that I'm in where you're going for the bigger moves. We have reversion trades, which is more of a scalp where you're just playing these reversion ATR reversions, the 1, the 2, the 3, and playing for a move back to the zone. And then we have auto entry now trades for the R traders that just demand that they refuse to, you know, wait for the market to move out of these volume events like I do, and they want instant trades. You know, so for instance, this comes down here and I get buy ice in these GEX levels, I'll jump in right when I hear the volume event. So we have, you know, and we're adding trades constantly. And we're always evolving, right? As a trader, you always have to be evolving. It doesn't mean just bringing new stuff into your trading on a whim, but you know, if you see something consistently working, then, or if I do, then I will bring it in. Kind of like, you know, when I originally, you know, watched the Ludwig levels, I kept watching them work, and guys were raving about them, and I watched them for a while. I said, these things are ridiculous. I brought them into my trading. So that's the same with market profile composite. So, you know, if I see something working over and over and over, I will bring it into my trading. But it takes me a while to watching it. Anyway, it's just common sense, like these sexy Gexy trades. You know the dealers are going to be hedging at these levels, so you know you're getting activity, counter activity in those levels, and then you throw in a volume event in those areas. It's just common sense that those work. So that trade is still a trade work in progress, but I've introduced it and I'm still trading it, even though I'm going to tweak it a little bit, just because I know those are legitimate areas that you're going to get a bounce many times. What you want to be careful, like if this does come back, turn around here, and we run into that, and I get buy ice. Yeah, great trade. One, you know the dealers are coming in there, and if you get buys, you know the big money's buying in there. But be very careful with taking these sexy Gexy trades if you see high relative volume, heavy relative volume first and foremost, because the big money's playing and it can blow right through those areas. And then the footprint, which we'll look at, it'll be a little convoluted today because of the volatility. So more so, keep an eye on the relative volume. So you can see here, like. It's very important to monitor this stuff. So on the way down here, you can see ES was over 200% of its normal volume overnight, or not this morning. There was a ton here too. So another way you can look at this stuff too, kind of like we look at our SI events. These are lines in the sand. So there was a ton of activity here, and then down here, I'd say it was up here. So a lot of activity. What does that mean? It means there's traders loaded up, long and short. When it moves out of here, you're going to get extended moves. Just common sense. Traders are loaded up. They need to get the hell out of the trade. So, this is a very wide zone. It's a 40-point zone. I'm not trading this, but I'm keeping an eye on it for a thesis. If this breaks below this, all these longs in here, not all of them, but a lot of them are going to be puking out trades. So keep an eye on the relative volume areas while you're trading. Very, very important. All right, so tick strike is actually very quiet, which is weird. And the other chart I have on here is Bark Lick and a red rum short in gold. So earlier gold had a broken ice by ice event, so I have 6 distinct stop iceberg setups I look for in important areas. Bark and Lick are not in important areas; they're just trading the event in itself, because the event in itself is an edge, right? So what I look for that trade, this is the Bark trade, blind ATR retest confirm. That's why it's called blind, because it doesn't have to be in a specific area. As far as my important areas that I look at, we got the ATR, that's that blue line. We did get a new event, so I do default to the newest event, but as long as that event doesn't turn bullish, I can still take a short off that prior event, and that's exactly what I did. So you had the ATR, you had the retest of the zone to the tick, basically. Did a little higher. Actually, I didn't even see, well, yeah. Yeah, I probably should have. Well, I already had this on, and I didn't stop out of it. But anyway, if it tags, if these new events turn bullish, then I don't put on shorts. But anyway, I didn't stop out of that, and I still have this on. And then you have buy ice, and I can trail my stop now. But I'm trading, obviously, that liquidity for the lick trade, the bark trade. I got out of a couple here in this other area. And then I have a red rum on. I'll show you that trade here. So this hit the market profile composite a little bit ago. I got out of a couple. These are areas that I'm consistently getting out of some, not all of them. I'll get out of all of them at the lug. But it tagged that. I got out of, like, I think I had 6 on. I got out of 2. And then the other trade I put on was a red rum. So these are all, everything I'm referring to are these trading strategies. We have funny names for them, memorable names. Red rum. Take fade trades in the algo guy red ribbon. Algo guy is exponential moving average red ribbon. SI events have to be either icebergs that are in the direction of algo guy or stop run fades. So in this case, the first one I put on was into this ribbon. So this was buy ice, so I'll still take a red rum, but it's not an aggressive, meaning first move out, right? So it was this guy here, right around there. Sorry, wrong color. Still wrong color. There we go. Right, that was that. But it did the ATR retest, so I'll take those. And then say it came in here again. I actually put this on. I was just, it's kind of blank in here because it needs to be sell ice. I added to the trade off of that guy, but I needed to demand the ATR retest for there again. But the point is, if you come into these resistance areas, you get sell ice.
Options that are under consideration include
If it's
essentially
buy ice, I'll still
replacing the
take it because
mechanism with a
guys,
full
we're just
ban
looking
on
for
handling
concentrated
Russian
volume,
crude.
aka concentrated traders in these areas, and we take advantage when they're wrong, whoever's wrong. All right, so the point is, I'll still take it, but I need to see ATR retest. But you can see this thing's just tagging the red ribbon. So I learned this, talking about bringing things into my trading. I mentored a guy, this probably was 8 years ago now, 7, 8 years ago, that used this exclusively to trade off of, and he made millions of dollars using it. The way he would trade it is he would wait for tags of the red, and when it broke
So again, the
back below
G7
the
considers
blue, so
options
the
to
blue's a shorter
harden the
term,
price
red's
cap on
longer term.
Russian
These
oil.
ribbons are just different time periods, right? Longer term time periods, shorter term time periods. He would enter the trade when it got back below the blue, and then put a stop above the red. And he was doing great out of them until it didn't work for a while, and then that's when he came to me and wanted to learn about the Stop Iceberg events. So, once watching this, I started talking to him and mentoring him. I'm like, this thing is pretty incredible too. Most times, some days it'll be crossing back and forth, but like days like this, you can see tags the red, real close to tag of the red, tags the red, tags the red. So, a day like this guy would have had probably 3 or 4 or 5 trades on, right, and still in his favor.
Short
The point
validated.
is, anything I use, as far as important areas, I demand a volume event.
It's been 10 minutes time now
yeah,
at
you
the
can take
bottom of
those
the hour.
trades,
See the release of
but
the
I demand a volume
EIA's
event,
weekly
and that
natural
just
gas
helps
change.
me confirm
Forecast
the
sees a draw
area
of
as far as
126
heavy
BCF
volume
on the prior
trading in
draw
that
of
area,
190
right? And then I
BCF.
know if I'm right, guys are going to be puking out of there. That helps it move, more directionally in my favor because you've got that fuel pushing it. So that's why I demand in anything I'm using, including Ludwig levels, which are the second most powerful thing I've ever seen in my trading career, I still demand a volume event. So that's me. Some guys trade it, some guys and girls trade it blind or naked, for lack of a better word. Meaning they'll just trade the Ludwig levels as soon as it touches them, but I need to see a volume event. That's just my trading style, and again, it's from my experience of trading volume for 25 years. Alright, so this thing's just bouncing around. Again, I missed my chance to get out of this full trade. If it comes back, I will be getting out. We'll monitor when it gets down to the blue lug again. I hope it does, because I made a mistake not getting out there. What's very odd is none of these things are firing off. On a day like today, you'd think they'd be going crazy, but everything we want to look at is Hero. So yesterday, I wasn't here. When I got back, I looked at Hero, and it didn't look like it was that big of a move on the Hero. So that just tells me that wasn't options activity. That was big money unloading into the market. Let me see here if we can find that. I screenshotted it. This was it here. Yeah, I mean that huge move, 200 points in the S, and the Hero, went 800 plus 800 to minus 1.6 billion. That's not We see that all the time, right? I was expecting to come home and see the hero is at minus like 10 billion, right? So again, this is just another thing you can be using in trading. It's very important to keep an eye on this because options dealers are a big part of the markets. They are not the only entity though. So yesterday was a perfect example on this move. Options dealers, yeah, they were participating, but this is not what caused this move, right? There was bigger money in here unloading on this thing. So, hero is a very important part, and anyone who's been watching this stuff, it's amazing how the hero, especially actually yesterday before the Fed came out, hero was just spiking back and forth a billion, 1.5 billion up, down, up, down. The market was going right along with it, right? Just options dealers, because they're the only game in town until the big money comes in. So it's very important to keep an eye on it, but they're not the only players in the market. Most of the time they are, right? The options dealers and algos are usually the trade 85% of the time. 15 to 20% of the time you get the big money coming in, right? So yeah, most of the time the hero and these algos they run the show, but you just got to be aware when that's not happening, and relative volume will usually give you the best call. So I mean, you can see here yesterday, right? Like look at that. So that is the definition of big money after the rate stuff. That's what causes that, because you've got options dealers hedging. You've got these algos playing these for bounces. When this big money's unloading, when you're getting 6, 7, 8 times normal volume, they get absolutely crushed, right? So keep an eye on relative volume and volume events. I don't know if I've ever mentioned that before. All right, if you guys have questions, actually I have my thing turned down too low. We just got Stops and Russell, and I missed a YM short too. So again, I'm watching 15 different futures products. So I'll hear something, but I don't hear it. Have this alert up so you can see it visually too. So you just go to File and Alerts.
U.S. Senate Majority Leader Schumer says the House GOP is in shambles. We must have bipartisanship. Brings us now 5 minutes away to the bottom of the hour. We see the release of the weekly EIA.
So I might get lucky to get out of these.
Forecast a draw of 126 BCF on the prior draw of 190 BCF.
It's not quite there. I mean, I'm going to see if we can get another swipe down here, but I don't need to see an exact tag of the blue log. I mean, this, like I said, I would have already been out here of these shorts, but hopefully I don't get penalized for my mistake. And like I said, I'm still short gold too, so keep an eye on those. But we're on, it's supposed to be a live trading webinar, so let's find some live trades. Sell stops in Russell. So this is a perfect example of of course, as usual, missed the trade. This is a sexy Gexy. So as long as there wasn't heavy relative volume right here, I would have taken this trade. Actually, this is not even set up right. So I'm hoping this was heavy relative volume, because I'm going to be very upset if I miss that sexy Gexy. We'll go over here in a second. So this, for some reason, didn't switch to March. Let's switch this, and so I can cry about missing this trade. This thing is really, really slow. I might have to restart that, and that's not going to be fun because it takes like 5 minutes to reload. Hold on here. Yeah. Please be high relative volume. Please. Please. We'll see here in a second. So anyway, while I'm about to start complaining, this is the trade. This is the new trade that we've incorporated in the room, where you get, and it needs to be, in conjunction with the support level. So this was support, put support. This is Method Q. Did a couple webinars with him. Go to my YouTube channel, they're on there, or my Twitter. Anyway, we look for sell stops in here. One, sell stops are usually fades because it's just guys puking. Then the dealers are going to be participating here, and you get that quick bounce. So the rule of thumb that I'm using right now is, a lot of guys that are trading this are just looking for that quick bounce, but that's so arbitrary where they're getting out. And there's a guy in my room, he's been in my room for 4 years now. He's taking these and he's getting out, and he has this arbitrary number set to it. I don't agree with it, but he's making money. He's made money like 25 straight days. Well, the way I'm doing it
Russell
is if it
2000
bounces.
index now turns negative. Last down
Actually, I can put
0.1%.
these on right now. Hold on, let me put this on. I don't usually do this because I already missed it, but of course I don't have it set up here. Hold on. Hold on, Russell. Don't be running away on me. I'll explain why I'll put this back on.
Order filled.
And I'm doing it in the face of this stuff selling off too, but I'm probably gonna get smoked on it. Hold on. So my stop's way down here. So the great thing about this is a great risk reward trade where I'm usually waiting to even enter this trade, which I will look at. There's potential position trades on here are off of this event, but I will wait for it to get the ATR plus 15% out of the zone. That's just from watching so many of these. So again, this is an auto entry trade, or if I get an event, I get in right away, and you can see the difference in the risk. I'm only risking down to here versus putting it on here and risking down to here. So the rule of thumb I'm using, again, this is a trade in progress, but I'm already trading because I've just seen it work so often. Actually, the number one thing I need to be looking at is this heavy relative volume, and it is maybe. Hold on. So probably another
1 minute
mistake
remaining.
that I just made. It's a live account too. That I just took this trade. I could find the damn. God, it's so ridiculous. Yep, I should not have this trade on.
NQ short
Order
entry.
filled.
All right, so you see right there, I just got done saying I shouldn't put this trade on, and I was afraid I was going to miss it, and I jumped in it right there. Don't be taking sexy gexies if you see the big money in here. You're going to get run over most of the time, just like that. So I got out for a little loss, but I shouldn't even have put the damn thing on. All right, hold on. I'm going to get out of these NASDAQ, I think.
10 seconds.
Got the natural gas number coming too. All right, so this was that area. So I am out of these trades. I'm going to give this a second to blow through here. We saw the blue lug. You see all these gex, these two
Draw
gex levels. Gex
125
1, which is the
BCF, a
heaviest
draw of
one.
125 BCF, higher than the expected draw of 126 BCF.
All right, I'm out of that. All right, so I got out at the blue lug. I got lucky it came back. Usually when I make mistakes like that, I take it on the chin. We're right here. Blue lug, pointing control, I just showed you that. The hell. And then we got these gex levels, so I'm out of that trade. If it breaks lower, it breaks lower. I can actually trade, I can trade shorts off of this new event, but we're into the lug. It hit the ATR right there to the tick, surprise, surprise, came back to the zone, surprise, surprise, moved back out, right? Pattern over and over and over in every single market, right? It's insanity how often this happens, and that's why I ever trade for it. So anyway, I can't. This is my signal for bark and lick shorts. I'm not taking this into the blue lug. It doesn't mean it's not going to blow through here and form new lugs. But you can ask my room how many trades just got burned the other day taking an ES short because the structure stuff looked like it was going to blow through, and I took it at the end of the day the other day, and it
I
just
have
did
posted
one of
out the
these on
weekly
me. So
EIA natural gas storage
trust me,
report
if it
on the
breaks
feed
through
for those
here to
interested.
form new lugs, you're going to be getting. There's always another event right around the corner. You don't have to force trades. Granted, I love being short these markets, but hold on a second, guys.
S&P stocks LES 633 contracts.
All right, so I am short ES as well. We got a new event in there right now too. So this may be a sexy gexy. Relative volume is not heavy, so I'm going to take this long. So I'm short one account.
Order filled.
So this is just the Gex 5. So this is just one level. If you want to try to wait for one down here, this one's probably even better. Hold on one second, guys.
Order filled.
All right, sorry about that, guys. All right, so I took a sexy Gexy here. Again, this is the auto entry. I'm okay taking it because there was no heavy relative volume. Doesn't mean it's not going to blow through the area. But you can see the relative volume is not spiking here, so I'll give it a shot. This one's probably going to be even better. Obviously, the more Gex levels you get, the better the area is, right? So if it makes another move down there. But the point is I got long this one. So my rule of thumb here is right now, as this is a developing trade, because we're looking for the instant reaction with the dealers coming in, right? So I will get out at just in front of an ATR of one of them, and then the other one I'll try to let ride for a bigger move because we do have a volume event, the concentrated trader volume as well, right? Like I said, guys are trading these things naked without volume events and looking for pops, which makes sense because dealers have to hedge here. But what I'm doing is I'm waiting for one of these because I'll take the first pop and then maybe we get a bigger move because we have the concentrated volume event. So anyway, I'm in that. Here's my stop down here, 45.50. So again, if I'm taking a traditional long, which I may off of this event, I'm waiting to get in for it to push an ATR out of here to get in. These trades you can jump in right away. So I only have one other trade where I'll get in right in the middle of the zone, and that is the TikTok, which we may put on today too. If we hear a tick extreme, I'll go over that if it happens. Anyway, my stop's 45.50 for this. Actually, I have too much size on here. This is I'll get smoked on this. I have one full one here, and this is gonna cost me. So you can see the position sizing. Well, I guess it's okay. So this position sizing is basing it off if I'm entering way up here. So I can only put on 4 micros to risk $500. That's the great thing about the zone drawing tool. You put in your capital, what you want to risk per trade, and it all comes out for you what you should be trading per position. This is the most important part of trading, is controlling your risk, because if you're trading too big, you're going to blow out your account. This is already going against me. So I am watching this other level. I'll put on another one here if we get another sexy Gexy down there. Let me put this stop in first. 45.25. All right, so keep an eye on that. As far as positional trading, let's see what we got. So we got the volume event. That's step 1. Step 2 is define. Is this an important area? It is. So this market has moved through here already yesterday, like ripped right through this guy, right, all the way down to this one. If a market continues to trade through any important zone, you don't want to keep trading it. It's not relevant anymore. But this has already ripped through here once, and this was the bottom of this balance area at the time that it basically launched from. So I will take an Izzy long if this holds. So this is waiting now. This is a traditional entry where I'm waiting for this market to move all the way up to here to get in, right? So I hear all the groans and the eye rolls and, oh my God, you're waiting for 11 and a half points before you get in the trade? Yeah, because I've learned the hard way jumping in these trades. I'm not talking about sexy Gexys, just regular. You jump in these things just because it's at an area, and it's not going to be a fun trading life for you. So if this can push an ATR out of here, which I demand, it has a much, much better chance of moving higher. So Izzy long, 71.50. I am still short, by the way, Bark and Lick. I need to see if I need to be, or not Bark and Lick, just Bark, sorry. I put that on before the webinar. I already went over that. So let's see where we're at so I can get out of some of these. This is real close to this blue lug too. So this is close enough. If this can't push through, like right now, I'm going to get out of these. And this is what I'm talking about here. This is my blowing out of my PA account yesterday. So that was a peach. I didn't even know I was doing it because I was at the doctor. F. Give myself an F for that one. So anyway, these are the trades. I just got out of that NASDAQ trade, and this is that ES Bark right there. So if this can't push through here, then I am going to get out. We're at the blue lug right now. So just like anything else, if you see heavy relative volume, it's got a much better chance of pushing through the lugs and the Gex levels, so on and so forth. So I'm going to give this a second. Plus, we got blue lug and Gex levels here. So I have no problem getting out of this. Again, there's another trade right around the corner if I get out of this and it keeps getting smushed. And you got market profile composite. All right, I'm out of these. So that was a nice Bark trade. Talked about it right when I got on the webinar. I was off of this dude. ATR retest. I don't know if I've talked about that pattern. Get in. Stops up there. Take it down there. I think it was that one, or was it this? Yeah, that was that one. So great trade. If you guys, my trading room better be taking these trades, or there's going to be some verbal lashings this afternoon. I don't even know what I missed, what you guys missed yesterday. Let's see if you guys are talking about it. The news announcements are so loud on YouTube we can't hear you over them. So this was supposed to be fixed. Dan, help me out here. I thought we fixed this. There's this why, desktop audio. So I think when I downloaded the new version, this is probably why. So just let me know if you hear another, if you hear the dude talking again, let me know if it's better there, KC. I appreciate it. Another thing too, before I forget. So Bookmaps has this 12 days of Christmas thing, which is actually kind of a good idea. I didn't really understand what they were asking me for when they asked me to. I thought they wanted 12 different things, but it's just one thing from me. That's this here, where you get 12 days of tips. So I think I'm day 12. I think I'm this little candle dude. But each day, it's just like opening it up like an advent calendar. You get it when you get a tip. It's actually a pretty good idea. I think Bruce came up with that. So anyway, I will post this into the YouTube. You got to sign up for that. And my volume's crazy low. Dan, could you help me, please? So my volume's crazy low in Bookmap. But you hear the guy talking. Hold on. He's texting me right now. Yeah. So how do I change that, Dan? I want people to be able to hear me when the market goes to 0. Increase mic aux, even though I missed it yesterday. You know how upsetting that was for me? What? This is... What do you mean increase it? I need to enter settings. Alright, right here. Where at? What am I? Here? Or here? Oh, 200%. Well, how come the desktop audio says 0 and everyone's saying the guy's talking over me? Let me type this in here. So this says 0. Why are people saying he's talking over me? All right, so is that good? No, I turned it down because guys are saying they can hear my desktop stuff over me. Well, I know, but I want people to hear me. So if I turn this down, it'll help, right? The desktop. All right, you guys should hear me better on the mic. Sorry for the admin stuff, but I'm not privy to OBS as far as how to control it. And I just missed this exit, of course. I didn't quite get up there. So I still have the sexy Gexy on, right? So again, my rule of thumb is I get out. If it got real close, I would have been out of that because it just bounced off this Gex level. So this, I'm so sick of making mistakes. I can't tell you how many thousands of dollars I've lost in the last week just making stupid mistakes, kind of like that PA account you just saw. Anyway, I would have been out right here. This is close enough to this one ATR that, this is the ATR reversion trade. But if you got a Gex level right in front of it, it's okay to get out right there. So I just cost myself, 8 points on that sexy Gexy. Now I'm going to get burned on it, 100%. Because that's how my trading life works. When I make a mistake, I pay the price every single time of my life. So they call it negative reinforcement when you do something wrong in trading and it works out. There's no such thing. I'm going to just get out of this right now. I already missed my exit, so I'm not going to hold this. I'm hoping I get another one down here. So if you guys took that, if you got your exit right there, the way I'm trading it to get out of one at this first ATR, if you got a Gex level right in front of it, don't try to squeeze out an extra point, right? So I got out of that. I cost myself 8 points as usual. It's pretty pathetic too because if the markets were whipping around, it's one thing. Like I have no excuse. So if you're still in it, it's coming back, by the way, too, because I got out. So, guys, I've been doing this for 25 years. You would think I'd be a little more, I don't want to say professional, but a little more weathered. I'm just like anybody else. You have, 5 million missed trades and mistakes. It starts to wear on you. I'm just a human being. So you're going to hear me bitch. I say it all the time. I bitch because that helps me get it out, right? The number one thing in trading, and any trading psychologist will tell you this, is you do not bottle up your feelings and act like the stuff doesn't bother you, right? It doesn't mean you lose your mind and start breaking screens like I used to when I was a young punk, but you get it out and you move on. If you sit there and be like, oh man, I just made a mistake, it cost me $2,000. Oh well, golly gee willikers, on to the next trade. You know that's not, that's, you're being fake, right? Get it out, move on. So that's why I talk, you hear me bitching nonstop, because that's my method of getting it out and moving on, right? So, and here we go. Here's some more bitching. So I couldn't just do that when I was waiting. So there's your sexy Gexy trade, by the way. I want to swear really bad right now, but I won't do that. So there you go. Sexy Gexy, winner, winner, chicken for dinner. I told you the second I got out of that. So this is why I lose my mind. Now imagine that, and times about 50,000 in 25 years, and then you tell me that you would not be in a rubber room with a straight jacket on right now. All right, so anyway, this is actually, I'm short. Actually, did I get out of those? Yeah, I already got out of those. So this is why I got out the lug, guys. If say the lug wasn't there, the way I trade these, if I get the new event, then I just trail it to the new event. So I'd be out right now anyway. But this is why I get out at the lug. Whoa, look at that. Hey, what do you know? Actually, I think I missed the slug here too. Or is this a slug? Yes. So this is Izzy and a slug. I'm going long Izzy and slug. Remember we just talked about that? Hold on here. Entry's at 73. It hasn't quite touched that yet. This thing's probably about due for a bounce as well. So hold on, I'm going to put it on this live account since I already missed Sexy Gexy. Don't misconstrue what I just said. Nothing is due for a bounce, as you saw yesterday, but it would surprise me.
Stop failed.
All right, I'm in that one. Hold on, I got to put on slug on this one. Of course, fell to the tick. This all feels very familiar. All right, slug and Izzy. I'm going long. We already talked about Izzy. 26. So I can only put on 3. I was going to put on 12. That's not good. All right, so again, guys, you made me thinking, what? 3 micros? What are you talking about? Well, because I'm risking $500 a trade for the volatility. The ATR, which is 11, and the size of the zone, for me to risk $500 on a trade, I can only put on, I can put on 4 now if it comes back. That's it. I can't believe I got filled to the tick there, though. That's real surprising on one of the accounts. All right, so those are working. I didn't get filled on Izzy either. So Izzy is supposed to be in there too. Hold on. So that's at 72.75 now. So that I already got one of the accounts on, but if it comes back, I'm going to put on Izzy and Slug. So what am I talking about? I'm talking about my trading strategies. What are your trading strategies? Trading strategies are just areas that I wait for a volume event that I put the trade on. You may have your own. You will have your own. Great. I don't care what you're using. I don't care if you put on trades when the sun goes behind a cloud. Make sure you get a volume event if you want an extreme edge, right? So this one was all the way up here. These are all the position trades. Stop run at a major lug. That was a stop run at the major lug, and it was also in Izzy. We already talked about this. This is traveled through here, but I'll give it a shot, especially because we got confluence with the lug. That was this zone. My inflection zones that I draw where prior important things happen. I got the volume event. I take the trade. And this might be a pick as well if it comes back. This was a pick as well. So guys, this is what I look for, right? Now we got, and it's even better when you get confluence. Doesn't mean it's a 100% winner. Nothing's a 100% winner. I got the stop run into a prior market profile composite. I got the stop run into the Ludwig level. And I got the stop run into the inflection zone. 3 different things that I should be short on. And of course I just lost it. Hold on here. I gotta find the chart because I just minimized it. So anyway, 3 different longs. I still gotta put on pick if it comes up there. I just passed it. There we go. And then there's the Izzy. Let's take a look at a euro. But guys, I mean, anyone in my room knows, and especially if you're trading these on, it is unbelievable how these markets tag these exact prices. Like whatever, you know, what I'm using, I'm not saying I'm brilliant, but I'm pretty damn brilliant. But we've been moving these too. So it's like, it doesn't matter where I move them. It's always the high tick, but it's like, it is incredible how these markets tag these areas. It's unbelievable, actually. Here, let me put that. I'm just kidding. I'm not brilliant. I'm actually a moron. Brilliant people don't leave trades on live accounts and blow them out. So I'm not so brilliant. All right, if that comes back, I'm going to put on a pick 2. We got 3 different strategies. I'll go long. If this comes back to 72, 75. So this is the zone drawing tool. I haven't even put in this document yet. So this is using the ATR, and the yellow line is my entry, and then here's my stop. Again, I hear the groans. What? You're risking 30 points if you put this on? That's your stop. Are you out of your mind? Yeah, because the ATR is 11, right? And the reason I do this is because I've traded about 14 million of these things, and I know that's the best way to stay out of algo, though. You see how the market looks like a Christmas tree with these colors. What is that? That's just algos. So the best way to avoid getting algoed is to make a push in ATR before you get in, and make a push in ATR. So if I'm going to be wrong on this trade, once I fill in the rest of them, it's got to come all the way back to the ATR. It's got to get through the volume event where there's trap traders, right? And then it's got to push another ATR plus for me to be wrong. And then if it does, then I say, wow, that's great job, guys. It's because this is a competition, right? All right, sellers, great job. On to the next trade. That's what trading is, if you have an edge. And you do if you are using this. Speaking of which, let me put this in the YouTube channel. Here's everything I'm doing. Right on top is a drawing tool. It was in beta for almost a year, and now it's live. Members of my room get 20% off of this puppy, and then we'll go over the rest of the stuff. This is my indicator course. Actually, I need to do it because it's still relevant. This is where I just explain my 6 distinct setups, how I trade them, ATR, how to set them up, settings, everything. All right, I just got filled. Now I'm long slug, pick, and Izzy.
In 10 minutes time now, around the top of the hour. See the release of the Kansas City Fed composite.
So the one good thing I did there, how good was that exit when I was short? This is why I get out at the lugs. That's 20 points. Bounce. I'll pat myself on the back on that one. Not that I did anything, just actually caught it for once. Getting out, that is. All right, let me post this in the YouTube channel. If you got questions as well, guys, put them in the YouTube channel. All right, Jim Thomas is still saying the YouTube is so soft. All right, here we go. So first and foremost, I want to. Well, you're probably going to struggle at this area initially. Why? Because dealers are going to be hedging at this thing. Are they the only player in town? No, but you can see it's kind of struggling. You have this. So if you wanted to take your quick 3 points or whatever, get out of some, not all of them, not the worst idea because it could just fail here, right? This for me, I got in here. I'm not getting out here. If it fails, then I got to accept it. This is another story. If it gets up to this prior event where I know there's longs that we're buying into this mouthful of sell ice that are praying it comes back there, what do you think is going to happen? At least the first move back into this. It's going to do that. Why? It's called common sense. If you're in here and you are long and you are buying the crap out of this thing and you're in the mouthfuls of sell ice and you said, oh my God, it actually already happened here, right? So this is a perfect example. Whoever bought here said, oh my God, what just happened? Please, I'll never do this again. I promise. This is me, how I used to talk to myself when I would have trades on that would go against me. I'd say, please let it come back so I can get out. I'll never do this again. And I would get out and it would cause the next move down. So it's already done that once, but I'll still watch this area to get out of some of these if it starts to fail. But this is exactly what ATR retest is. Confirm, right? It's just common sense. And here we go. This thing is failing here. And I actually have too many of these on in this live account. Let me get out a couple of these so I don't lose $1,000.
Order filled.
All right. So if you wanted to get out with a 4-point winner or whatever that was, 3 or 4 point winner, get out of a... Not all of them, guys. These are just in the areas that you're going to get reactions, very likely. Get out. You actually had Gex 1 in, blind spot 9. So this is... You got all this stuff right here. So if this fails, it's not going to surprise me one bit. But I'm not, I got in here. You could say on this event, you could say, you know what, I love that entry, but I'm not entering until it can show me it can get above there. Wait for events. Fine. It's probably the smart thing to do. As you can see, it just failed right off of there. So, guys, the thing is, if you understand what's going on here, it's not such a, torture treatment mentally on what, you're in here like, oh my God, why? Oh, why did it bounce there? One, Gex, blind spot. Spot gamma levels. Put wall. 2, look at that, price change. I'll give you a little teaser. That's what my 12 days of Christmas is. It's just something I talked about in the Mentor MQ. These algos right now are running the show. What does that mean? It just means there's no big money in here playing. So once that happens, guess what they start to do? Every time this price change, look at this thing. Spike, spike, spike. It's just algos that are trading off of this. So even if you are not trading this, I've been saying it nonstop. There's another one, little spike there. At least you can make sense of it. So if you're long here with me, you're not like, oh my God, what happened? I can't handle this. One, you know what, that's what was there. 2, that was a price change algo. So what you can do, you can maybe time stuff too, right? So I can't do these on the webinar. You already make enough mistakes. But say you were looking to get long there. You're like, okay, I got my finger on the trigger. Oh, wait, here's a price change. Just put this, say this stuff's not here, right? Oh, here's a price change algo. I'm going to wait for these jackasses to snap it back, and I'm going to get in at a better price. And I'll just wait. What's a better price? I don't know. Sometimes it'll pull back, 10 points. Sometimes it's 3 points. Another thing you can do is say, all right, here's a price change. I'm going to wait till I see an opposing price change. Then I'm going to get in, right? Sometimes you're going to miss it if it keeps price changing. So I say all the time, this thing works until it doesn't. The algos take it. Big money comes in, it could price change for 50 points. Right? So just be aware of that. But if you're in a trade, at least you keep your sanity knowing why the market is doing this. Look at these algos. That's what they're trading off of. Not every one of them, but as you can see, they affect the market. All right, so I'm probably, I wasn't paying attention to this stuff. I put it on. It doesn't surprise me if this turns into a loser because of this. But bounced off there. These dealers aren't, again, they're not the only entity in here. But you have the algos and the dealers hedging here. That's why you get the pullback. So hopefully it can push through here. If it doesn't, I won't be surprised. Then I wait for my next trade. That's all you can do, guys. You can't predict what's going to happen. You can just know your areas and try to be prudent. Speaking of which, of not being prudent. Still short gold. So another thing too, I should have been on my lit trade. Hopefully I get lucky on this one too. So the target for the lit, I don't care what you guys have been hearing me saying, I get out of the point of control, I get out of market profile composite, I get out of the Ludwig level. For my lit trade, I don't get out until it gets to the lit, right? So I got a great risk reward there. But you've got to realize that it doesn't always have to tag the liquidity because these algos pick up this size in the order book and they try to run it away to make this person chase. This person obviously is not chasing because it's been in there this entire time, but the algos don't know that. They know it's been in there. They probably could figure that out, but the point is they pick up the size as the market moves here and they run it away. So my point is, if you have a lit trade on, or if this is your target, you don't need an exact tag of the liquidity. If it gets close enough, this is probably a little too far. I'm talking like 10 ticks. I probably wouldn't have got out of this, but the point is, if this comes down here again, it's within like 10 ticks, 5 ticks. I don't need to see this taken out. I will get out of the lit trade. See what I'm saying? You get me? All right, so that's that. And here we go. So, guys, see what I'm talking about being an idiot. So this actually was the back in black trade. Hopefully my room's taking this stuff. So I just got done talking about how I didn't want to enter in this. See how my mind, so this is, Mark Douglas talks about in Trading His Own too. And I have a very, very bad habit of doing this as well. I'm better at it, but I still do it. So when I am long-minded, which I am, we're talking about getting through here, blah, 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 I completely am blinded to the short opportunity. So this is another trade, and it just worked perfectly. This is called the back in black. So there's, again, trades for everybody. Any mental mindset right here. Take the 1, 2, or 3 ATR backdoor reversion trades after market touches an important area and begins to move back through the given ATRs, back to the volume event. That's what that was. So this is the stuff when I get off the webinars, I just sit here or whenever, when I'm just sitting here and I miss it, I'm just like, what am I, I'm talking about this being a resistance area. Why am I not taking the back in black to the zone? This is another F. How many Fs could a guy take in a day? So anyway, there you go. I'll show you another one that just, there's back-to-back in NASDAQ the other day. Tags, wait for it to start coming back. You can take the 2, or is that just the 1? It's probably just the 1 because the ATR is so high right now. It's just the 1. So you take the 1. So if I didn't have my head up my ass, I would have taken this, pardon my language. Trust me, it'd be much more abusive language to myself if I wasn't on the webinar. I would be taking that, stops up here, and I'm out of the zone. So, missed that trade. Congratulations. So what I'm talking about here is, posted this the other day, so I gotta get better at these trades of the day, by the way. Oh, and here's, by the way, I don't know if you guys have, if I mentioned this. Oh, what's that? Oh, is that price change? Oh, did that just spike 10 points? It's just, again, when you know what's going on, it just makes things a lot more mentally, can't think of the word. Anyway, here we go. This is the other day, trade of the day. 12:17, took this on the PM webinar. Market came down. Just tell me if this looks familiar. Hey, there's those levels. It tagged it basically to the tick. Almost got to the 1, but it did bounce off that one. I took the 3, the 2, the 1 out of the zone. Actually, in this case, this is what I was talking about too. On the webinar, I got out right there because I was kind of struggling. I said, guys, this is close enough. You have a GEX level there. I don't need to squeeze out 3 points, even though it did finally come up there. So I got out right there. Either way, that was an awesome trade. I took that on a live account too. It was like a $2,000 trade, so that was awesome. So anyway, that's what I just missed there. So you can see, so guys, yeah, if you're trading one account, like with a brokerage, obviously you can't be doing counter trades, right? So that's a great segue into, uh-oh, my room's texting me, I think. No, it wasn't my room. Into this, Apex. So this is the one I use. Been using it for almost 3 years. Been paid many, many times, and blew out many, many accounts too, just like I blew out that PA account. But you go in here and any of the specials they have. So this is a great way to practice, not a game, practice your trading. Use the code Pulcini50 for every, I thought they had a better deal going on right now. I think they do. But whatever discount they have going on, use that code, you get it. Guys, there's no reason to risk your real money while you're learning how to trade or learning new methods, so on and so forth. And if you do well, then you're funded anyway. So just realize, though, the way this is set up, one, I hate how they do this. They all do it. Oh, there's a $250,000 account. Wow, I can lose $250,000. No, you can lose $6,500, right? So just be aware they have the trailing drawdown. So like, say you did the $300,000. It's not $300,000. It's $7,500. I love this scrolling thing here, too. It makes a lot of sense. Anyway, you needed the profit target before the drawdown, right? You can do all these smaller ones, so on and so forth. So, and it's a trailing drawdown. It makes it difficult, but it makes you control your risk, so on and so forth. But my point is, don't trade your live money until you know what you are doing, right? And again, if you're practicing, not a game, practice. That's Allen Iverson, by the way. I played it the other day for my trade room. And then you do well. Now you're backed anyway, and you still don't have to risk your own money. So it's a no-brainer to me. You guys do whatever you want to do. But the other thing too is, say if you go live, like I do have live accounts that I'm trading the Sexy Gexies on, and so I'll be short ES, and then I'll take a Sexy Gexy long or whatever. Just, you can't do them on the 2 live ones. You can't have opposing positions on, or they'll boot you, right? So just open them another one with one of the other trading funding companies. There's about 85 of them out there now. They're probably, I'd say 90% are going to be going under, because they have to, CME's not getting a piece of their pie, so they're making everyone go live. Surprise, surprise. So that's all changing. So, a lot of these funding companies that are just like booking bets, that's what they're doing, right? They're not putting the orders live into the market, which there's some loophole they're allowed to do that. It's all changing here soon. So a lot of these firms are going to be bye-bye because they don't have the funding to put traders live. They can't, for the margin, right? You can see here, like, I always love showing this because people are shocked, right? So if you go to, this is one of my live accounts that I use. Yeah, futures. This is a discount broker. So if you use discount brokers, they're great. You say commission, but don't expect some great customer support, right? It takes a while to get back to you. They're not too bad, but they're not as good as one where you're paying ridiculous commissions because they can't pay the people to service people, right? There's customer support. So anyway, let's see here. Look at this. Where are that? Margins, right? So you can imagine for every trader that they take live, like look at this. Like this, let's just go to the regular size contracts, right? Well, for things like ES, it's not too crazy, right? You only need $400 margin, $1,000 margin, meaning you need that in an account to trade one big ES, right? And trust me, in this kind of trade, you trade one, you can lose $400 in the blink of an eye. Anyway, you need 1,000. But you can imagine, and then look at the overnight maintenance, meaning maintenance just means you have to have that in your account to trade overnight in the Globex. It goes from 1,000 to 22,000. It goes from 400 to 14,000. So you can imagine traders that are live, they've got to have this money in their accounts for them to trade. So you can imagine the cash outlay to fund traders in the live market. So that's why most of them are going down, in my opinion. We'll see. All right, so we're just getting chopped to death here in this ES trade. It just keeps bouncing off this options level, right? So, you know, if this does swipe down and stop me out, I'm going to be watching. I still might not get stopped out. My stop's down here. I'm watching this as the next. I would take a sexy Gexy off of there too, as long as the relative volume doesn't pop. All right, gotta take a break. You guys got questions? Throw them in the YouTube, please. You could counter trade with micros. No, you can't do that either. You can't trade opposing. As on the eval accounts, and I'm not telling you to do something against the rules. That's supposed to be against the rules too, but there's no way they're monitoring 300,000 eval accounts, right? When you go live, I wouldn't do it because you're going to lose it. You can probably get away with trading opposing positions, which I do all the time on these Apex accounts. So this is what all this is, guys. This is what I'm talking about. So that's, I mean, this is today's stuff, but these are, hey, did I mention I blew this account out because I'm a moron? Hold on. So these are all the, where are they at here? These are all the trading strategies that I'm showing you, right? So this is a peach. I don't even think this was blown out. I think because I had a position on into the close, they just blow you out. So that was because this is live. Because you don't want to do that, right? Think of this as their live money, which they're going to have to be. You can't forget about positions. I deserve to get blown out of that because I'm an idiot. So that's what I got. That's what I deserve. Anyway, these are $150,000 accounts. You can see all these different trading strategies. That's Bark. That's I don't know all of them. That's why I have my list. That's these right here, guys. So when I talk about, come on, I have to always refer to this, you know, these are all my trading strategies, and these are the numbers of the trading strategy accounts, and so on and so forth. But, you know, and on these I'm risking 10%, and it's still a slow grind. A lot of these have been going for months, right? So it's like this one's up. What's this one here? Oh, wait, did I mention I blew that one out? This one's up almost 7,000. That one's up over 5,000. You may be thinking, well, that's not a lot. It is a lot relatively, right? The account is only, again, it's not a $150,000 account. It's a $5,000 account, meaning all I can lose is $5,000. So that's up over 100%. That's up over 100%. That's up over 100%. That one's up a little bit. And then I did, some of these are the 250s because they had the special. You can see, like, you know, that one's underwater, but the rest of these are pretty much, that one's underwater. The rest of these are doing fine. So this is how you should be doing it. I mean, you could fire on them and, you know, again, the great thing about it is you can, I'm sure guys got smoked yesterday, right, on those moves. Well, instead of losing $5,000, a real $5,000 account, you lose $42 or whatever it costs to do the evo. You see what I'm saying? All right, so just sitting here getting whipsawed. So I had another chance to get out of some of those again, and I didn't do it. So I deserve what's about to happen here. So again, my stop's here. I'm hoping these dealers can hold this when it bounces off of this guy. I wouldn't hold my breath for that, but you never know. If it does come down here and I get buy ice or sell stops, and to that, I will take that sexy Gexy. So there was a question I remember the other day. Well, if it's sell ice, will you take a sexy Gexy? No, I don't want to see. Yeah, I know the dealers are hedging, right? Buying down here. But if I have big money selling, I don't want to. I'm not taking the sexy Gexy. I want to see buy ice or sell stops, which are usually fade trades. We call them the dumb and dumber, like this guy was. That's what I'm waiting for there. Still can't get gold down to this liquidity level because it's gold and it just has to torture at all times. What you could take here, though, see, this is a perfect example where I'm blinded by these other trades to the long side because I want this thing to go down. You could be taking the reversion trades if it's bouncing off important levels back to this volume event. This is called the back in black, right? Guys, and I say it every day, over and over and over and over. When you come in my room or you're watching these webinars, you're like, oh my God, I can't keep up with all this. How am I supposed to put all these on? You're not supposed to put them all on. These are mine. These are on my brain. I'm giving you all these. You pick and choose which ones you like. Pick one. Pick the slug. I will promise you, if all you do is wait for slugs, you'll be a profitable trader beyond your wildest dreams. Do you have the patience to sit here and just wait for slugs? That's what most traders don't have, right? But pick a slug, pick an Izzy. Just trade those until you get really good at them. You get funded accounts, or you're up a ton of money. And then add another one. Then add another one, or go to these. I'm only going to take sexy gexies because I don't want to risk. I don't want to wait for the market to move out of the zones. I'm just going to take those. Fine. If that's what you like. That's your personality. Take those. I'm only going to take the reversion trades because I love the quick move back to the zones. Fine. Take those. It does not mean take all of these. You could if you have the bandwidth, but it's not expected, right? So don't come in my room and send me an email, which guys do. There's just too much. I can't keep up. I got to leave the room because it's just too much for me. It's like it's not meant to do all this stuff, guys. And or this thing, right? This is not meant for you to get every single thing that I'm using. This is what I use. Yes, you need Bookmap and the SI indicator, or it's not even worth listening to me because that's the driver of my trading. And again, these are discounts to everything. This is the same stuff on my website too, on the banners on my website. Clicking on me, you get discounts. Like the Method Q levels, the spot gamma levels, tick strike, right? And which of course is now, I'm going to lose on this long that I didn't get out. I had two different chances to get out of some of them up there. Trader Sync, Ludwig levels. You don't need all of this stuff. Pick a couple of them, right? But this is what I use, so I show it. So don't email me and say, hey, speaking of that, as I'm saying I should be taking these reversion trades, I don't take them, and then going right back to the zone. But don't email me saying, I can't afford all the stuff that you use. It's not meant to afford all the stuff that I use. You know, if I'm using it, you want to pay attention, obviously, if you trust in what I'm telling you with my experience. But if you don't, then don't use them. All right, there's another bounce off a lug. So what did I miss here in gold? I just got done talking about it. So this is a perfect example of an area. It's already happened once. I can take it. It tried to get in here twice. I could take some reversion trades. This is the back in black trade. I've already missed one. Which one did I miss here? That's the 2. I could have got on the 2 here at 41. And then I can get on the 1. That one's at 64. And guys, and you see here, it gives you your sizing for both the position trades and your reversion trades, right? So I could put, that's risking $500. So if I put on, well, you want to be careful of those. So say I do put on the 2 and the 1, the 3, 2, and 1. Well, for each one of these, if I'm putting on 15 micros, I'm risking $500 per. So if it comes back and stops you out of all of them, you're going to lose $1,500. So you got to adjust it if you're taking these back in blacks. Well, I'm going to at least take the 1 here. Could you just come down here so I can get in the 2, please? It's at 40. Hold on. Let me put these on if it comes back. Stupid gold. I'm just going to jump on that one right there.
Order filled.
If this comes in here, I'll take
Order
this.
filled.
So then I jumped the gun a little bit there because I'm greedy and I'm sure I'll pay the price for it. And then my stop's down here right in front of that liquidity, so that should be pleasant. 04. Alright. And then I take the 1 as it comes into the 1-2 here. That entry is at 65. And then I'm out at the zone, right in front of the zone. This is 10% of an ATR in front of the zone. That exit is at 88. Put those in, and so now I'm short position tradings and I'm long back in black. And of course, if I waited, I would have been filled there. meantime. So let's look at some of these other markets. Crude, I'm not sure what's going on, why this thing won't rip, but it looked like yesterday it was going to rip, and it didn't. Actually, this is what knocked me out of my PA account because I took a long and then I forgot to put my stop in and I stopped out because I wasn't at my desk. Anyway, you know, we've talked about this. Tried to break out. Held what? High volume node. First time, built more balance, broke out of that balance. Broke down through that high volume node. Should have gotten killed. This is why I was still remaining very bullish, and it didn't. When things that should happen in markets don't, you expect multiples the other way. And then it had tried, and now it's back here again. So now what's happening is this is forming a bigger balance too. So my thesis is I don't love the longs right here, and I will tell you if this breaks this zone, which is going to be the bottom of this current balance area, which is the high volume node of that, I will be trading double size shorts. If this can hold and come back higher and get above here, then I would be taking, you got a balance break out of that guy and of that guy, and I'd be taking probably triple size longs. So this is just me putting my thesis, which is a guess on what's going to happen. So that means say this happens, and this would be even better if you have a failed balance breakdown. Say that happens, and I get a volume event. That's bullish. Well, due to my thesis, I already know I want to trade long because the volume event's bullish. I'm a day trader. I'll take bullish and bearish trades, right? But that's a bullish event, and I already know what's going on here. That's when I trade bigger. A thesis is just a guess. I'm just guessing what's going to happen, and if I get a real-time volume, which is happening right now in that direction, then I fire. So that is how you trade bigger. I've told you guys stories many times. When I got back in the business after having to leave the business, 2013, I got back in 2017 when Bookmap came around. Dr. Brett told me about it, and he was associated with SMB trading, and they trade stocks, and I was going to trade stocks, right? And I was, learning from them, and one of the biggest things is with their traders. If their traders do not trade bigger size on their A plus setups, meaning in my case, if the setups agree with my thesis, they literally ground them the next day. They can't trade live the next day. Because you want to take advantage of when everything aligns in your favor, either thesis or confluence or whatever. So that's another little lesson for you. 12 days of Christmas lesson. All right, no questions. So, Dan, the volume's still so low. I keep getting, you can see it in the YouTube. Why is the volume so low? I got it at 200%. I have this at max. Why is it still so low? Should I put it at 300%? Good talk. Good talk, Russ. Alright, so sorry guys, you got to turn up your volume. I don't know what the deal is with that OBS thingamajigger. Alright, so there's just nothing happening. Let's see. I'm sure that all the trades I missed were winners. There was probably a back in black in Russell, as we call it. Let's see. So this never confirmed as a bearish event. It never tagged the ATR below. So yeah, I got the X levels on here, don't I? Yeah, they're way up there. So this was, I mean, you could take these ATRs aggressively too, meaning just this is how we were doing it for a long time. I was doing it for 2 years, right? It tags the one. Here's your one entry, stops up here, play back to the zone. I think the back and blacks are better because you wait for the back doors, and when it starts coming back through them, they have a better chance of getting back to the zone from my experience, especially if it bounces off an important area. Let's see what this bounced off of, because I guarantee it did. Oh, by the way, too, like we were talking about this in my room. This was kind of, these markets, the Dow and Russell were signaling this was coming. This guy, I mean, not this, but you know what I mean? So NASDAQ is up at its highs, ES is close to its highs, and Russell and Dow kept forming balances and breaking down out of balances, right? And you can see the trend, blah, blah, blah. So it's like I said the other day, I think it was Tuesday, I said something's going to give here. My guess is it's going to give to the downside, and that's exactly what happened. So, when all these markets are not confluent, that's Russell. This is before yesterday. It was already looking horrible. And then here's Dow. Right? So this kind of was warning you something was going to go down, and it went down. All right, but look at that. So NASDAQ, look at this chart. Like NASDAQ sitting in its highs, right? and Dow's down here. So not that they couldn't turn back up, but when you got two markets down near its lows, and you know, NASDAQ is going to be catching up very, very likely, and that's exactly what happened. Anything that would catch up that much, that quick. It was only a 1,000-point move. It's probably the biggest move I've ever seen. I mean, it's all relative because NASDAQ is so high now. So percentage-wise, it wasn't, you know, the biggest move I've ever seen. But I mean, that's wicked. And I missed every bit of it. And all I've been saying for, I don't know, 6 years is I can't wait for the markets to go to zero. Well, looks like they're headed there. All right. No questions. There's nothing going on. Still short. Well, I got both on. I got the back and black long, and I got out of some earlier in gold. I'm short the position trades. Actually, I got to put this on if this tags it because I forgot to put this at 88. Oh no, I put that in. So back in black, I'll take. I already took the two. If the one tags, I'm playing that to back to the zone. I didn't do anything here, and you know, what I was looking at is what did I miss? Yeah, I mean, you could have played it off the. I don't trade the baby lugs as important areas, but you could have said, okay, they're tag the baby lug. I'm going to take that one ATR coming back. All right, just giving you guys examples. I probably wouldn't have taken that trade personally, but you may love the baby lugs. Let's see what I'm missing in grain since nothing's happening. This is silver. There's been a lot of action in Ethereum lately. So guys, you can trade micros on this stuff. Ethereum, Bitcoin, it all is the same stuff. You're looking for concentrated areas of traders. The thresholds for here are only 15. I may have to up those. So it's drawn zones on 15. I think it's still relevant, but you know, I mean, here if you hear a ton of them in a day, like yesterday's a perfect example. I was looking at that move lower. You know, you're getting events for 150. That's the threshold. That's where it's drawing zones in Nasdaq. And you're seeing 500. I was seeing in ES it was like 3,000 buy ice, 4,000 buy ice, 3,000 buy ice as it was moving down. Don't be trading 700 buy ice. Yeah, that's going to draw the zone, but you do not want to be trading 700s when there's 3,000s coming in, right? You got to adjust on days like that. Those days don't happen very often, but when they do, you got to be ready to adjust. I got to close this guy out here. It's no longer relevant. Let's see, what we missed here. Oh, there was an A+ reversion earlier too I took. Hopefully my room caught this. This was before the market. What was this guy? So this is actually running with a trading firm. When you get, where was it? Was it this one here? Yeah. So you got buy ice. Another event. If your entry for the reversions, this is the A+. Again, this is running with a trading firm, automated. It's doing well. If your entry is inside the prior event, or just, you know, or was on the outside of that event, this is the same concept we talked about earlier, where these traders, whoever bought here, are praying to Lord Almighty it comes back so they can get the hell out. There you go. Right? So you already have the propensity for these markets to come back to the zones. Now you have that support. Support meaning it's got to push through here for you to be wrong, and that was quick. That was an instant winner. It was like tagged it to the tick, right back to the zone, out. Yeah, it's an A+ right there. Right. Anyway, so I said the other day, all these commodities look like they were going to get killed. They all held that day, and then they all gave it up yesterday with, you know, once the Fed stuff came out. But, you know, these grains, you know, they may rally now, but, you know, it's just a good example of thesis stuff, right? I was saying for days and days and days, soybeans looked like it was going to zero. Failed breakout. Didn't get through there. It did hold the first time. It got more balance. Breakdown. Retested that guy. Got through that. Bye-bye. Right? So, again, you get bearish events like below here. You trade those double size. I do. And then it's all fractal, too. So there's just one bigger one. I mean, it wasn't a perfect one, but guys, we're just looking for, this is the same concept of SI events. These are traders placing bets. The longer term longs in here are saying, uh-oh, let me out. And then the rule of thumb, when you get these bigger ones, right, or any of them, is when it does break out of there, you can expect the same size of the balance area. This isn't the best example because it never got back up here again, but you can expect the same move height-wise when it breaks out. That's what should happen. See what I'm saying? All right. What's going on my fun ES long here? There we go. So now I was trying to get through this stuff, but now I'm watching this. I'm not messing around here. I'm going to get out of one here if this starts to fail here again. But see, this is, guys, this is why I use this, right? Now the stuff, did you hear this stuff going off first time up here? No. Here's a tick, there's a tick extreme. We're almost at this. Hold on, let me get out of it. I missed it. So this is what I said to watch for. What was that? I just filled on the one, back in black and gold too. I gotta get that stop in. Anyway, watch this prior event. I'm going, but use this stuff to help you. So you can see there's sweep in the order book. That's important information. Let's bring up the volume pressure imbalance algo. See, there's a lot of buying right here. Nothing big, but this is price change. You can see it's trying to change, but you got bigger things happening. So this is a good example. This thing might not price change and come back. You see it's been price changing this whole way up. That's why I said it works until it doesn't work. Well, now it's price changing. These algos are trying to play the game. Someone bigger's coming in. All right, we're here. There's a tick extreme too, so I'm gonna get out of a couple of these. I got three. Yeah, I got three things on. I got slug, pick, and Izzy on. I'm gonna get out of two. Still have two on. If it continues higher. 26. Hold on. I got a live account on. Hold on, guys. I got it. It's real fun doing by hand. Why is this only?
ABC News says if we
Order
don't
filled.
get debt ceiling eliminated or extended, then we're going to have a shutdown.
Order filled.
All right. So, just such a great example, right? So, how many of you week longs said, got long here, you're like, I love this webinar. This guy Scott's incredible. He's the best trader I've ever seen. Oh, wait, no one's ever said that. But the point is, how many got long with me and said, oh my God, I got to get out. This is wrong. Oh my God, this is wrong. No, did I get out? No, because I know this is what markets do. And if I'm going to be wrong, not that I'm not wrong a lot, right? I'm right more often than I'm wrong, or I wouldn't be a profitable trader. But the point is, this is why I forced the market to push the ATR out of the zone. You can't get a better example than this. And then we showed the price change. Algo is working, it's working. Then it doesn't work because you can see why it's not working. These algos are trying to push this back on these price changes. Sweep, sweep, sweep. Big money's in here. You heard tick strike firing off. So it works until it doesn't work. The algos have this all built into their profit loss stuff, right? Meaning they know it works 80% of the time. Probably more than that. I'd say 90% of the time. The other 10%, they have it factored in for this, because the big money is going to come in eventually, right? Those are the times they get run over. Big money is done with their business, down there giving them the business, whatever referee said that. And then they just start it all over again. And then they make. Something like this happens, they lose. Right back to make. If you know what's going on, you don't lose your mind. All right, so this is a lot of activity up here. This thing has to make it through. So there's very good. This is why I got us some, right? This is very likely going to struggle here. It doesn't mean it can't push through it eventually, but these are any trader that was long up here is thanking the trading gods. It came back to this area so they can get the hell out, and that's why it's kind of spinning here and does this. So that's why you want to know where these prior events are too. All right, let me just make sure I'm not screwing up anything here. I got to put my gold. I got too many on here. Hold on. So this is the back in black trade. It's trying its hardest to get back there. So I took the 2. We already looked at this. I took the 2. Never got stopped. That was the 1 stop. So this came back. I got filled on the 1 now too. So my 1 stop's going to be right here. 32. Yes, there's going to be times where it tags it and then stops you out of the 1, comes back. So you got to make a decision. I've been talking to this is a trade in progress too, as for how we're trading this, right? You got to make a decision on when you put these on, say you got the 3, the 2, the 1 on. Well, are you going to risk the normal stops? Or do you want to get the 3, the 2, the 1, and then have all of them stop at the 3, right? Because you're going to get times, especially in gold, when it does that. So we can, which one of these got it? All right, so the rest of these, because I got too many on, the rest of them I'm going to get out at 88. That's just, I'm just playing for a move back to the zone. That's it. Back in black. I don't have any NASDAQ on. I got out there. All right, so I got some short positions for gold, and then I have the back and back long on in gold, and I'm still long. Why am I short one in ES? What happened there? I gotta get out of that. So I just sold too many. But I'm still, so before we hop off here, what did I do down there? Step 1, I look for the most important thing in trading, futures trading, in my opinion, volume event. Then I look for, hey, is this volume event in one of my important areas? And I said, wow, that's in one of my important areas. That's at the inflection zone, ISI zone. And you can get those two. These are, this in the spreadsheet that is the zone drawer. The spreadsheet is the zone drawer that's on the heat map. You can get both of those on this. It's all in this document. You can get this stuff here too. But you get them for free in my room, right? I had someone buy my course the other day, and the guy like went off on me and said, "Well, is this a bait and switch? You have me get your course, and then I got to I got to go and buy the spreadsheet, and I got to join your room to get the spreadsheet." And it's like I referenced the spreadsheet one time, and it's on the live trading webinar in the course. Like, there's no bait and switch, guys. And plus, it's $150, $149 for the room. The course is $900, right? So it's like I'm not bait and switching anything. But, you know, that's part of the course is the course. If you come in my room, you get this stuff for free. It's not a bait and switch. It's just, you know, that's the perks of coming in the room. So that's the stuff I deal with all the time, guys. It's like, I'm giving traders, you know, I'm not patting myself on the back, but I am. I'm giving you guys the best edge you'll ever see in the history of trading, in my opinion, right? And when you watch enough of it, you'll agree with me. And then I got to deal with crap like that. It's like, yeah, I'm bait and switching you, dude, for $100 or $150. But anyway, my point is, go to the room and, I mean, if you're in my room, you get this stuff for free. You get the ISI zones, you get the spreadsheet. Anyway, again, that was a volume event at the ISI zone. What else was there? I talked about this, but in case there's traders that came on late, that was also another one of my important areas. Market profile composite. Right there. Volume event, take the trade. What else was there? A slug. That was right there. How are these lugs, by the way? Do these things work or no? Like, guys, that's what I trade off of. So good trade. Again, it's probably going to struggle up here. I got out of some. If I get a new event, I'll trail my stop to that. Other than that, my stop's still down here. And I will get out as it moves into important areas. So I got out of some here and see if I can get through there. It's probably going to be tough to get through there. I do like that as a long, because that'll probably be tagged today at some point, but doesn't mean it's going there right now. All right, guys, I'm out of gas. Here's some questions quickly. Scott, do you see VIX on your analysis? I have VIX up, but I just let the volume events tell me what to do. I mean, VIX is right here, so you can come up with strategies with VIX. I don't need it, guys. I say it all the time. The less you have in your trading, the better you're going to do. The simpler you're making trading, the better you do it. The more you have in your trading, the more conflicted you're going to be to put on trades, right? Because you're going to be getting a long signal, a short signal. Oh, what do I do? Just use volume and you'll do fine. So anyway, this is Mag 7. It did pop. So once again, there's not a lot going on here. Options dealers are running the show as usual, right? They get loaded up. They got to hedge with futures. S&P. Let's see what this did. Right there, just popped 2 billion. Almost went from plus $1.5 billion, right? So guys, again, this trades like a market too. But if you at least can understand why the markets are doing what they're doing most of the time, there you go. That's why that rallied right now. So it's just great. The stuff I use, you don't have to use it all, but I use it for a reason. So you may want to incorporate it in your trading. Mark says, can you walk through an example of A plus reversion trade on ES? There's no A plus here. Well, there might have been. The 2 would be, right? So, but I would not take any reversion trades. See what's happening here? This is the stay away from reversions or sexy X's. Do you see this? I'm telling you, you don't want to be messing around when you see that, right? It's big money coming in here. So I'm not hoping for algo reversions when big money is unloading on the market. So I'm not taking this trade. You guys shouldn't be taking it either. You can do what you want, but I'm just telling you. But this would be the example of an A+ reversion trade. This one, so the way it's meant to be is you have an event, and I merged these two, by the way. This is a bunch of stuff. I know this maybe one day Vadim will get this so we have tabs so I can get different indicators down here instead of everything on top of each other. We've been asking for about 2 years. Let's just turn that off, right? So this was this stuff. I mean, don't get me wrong, Vadim is brilliant and I love him, but I mean, come on. Just give me some tabs down here to toggle in between this stuff so I can not be losing my mind. Anyway, I combined those two. So anyway, that was the last event before this one. The A+ reversion, I just showed you this in gold, is when you get in the reversion trade if it is before or in the prior. That's not the important thing. The important thing is if the stop for the reversion trade is through the event. So if I take the 2 here, again, I'm not taking this one because of high relative volume. I get in that because my stop is through that event. That's A+. This is running with the trading firm right now, and it's doing very well. Where I don't have, it's a very labor-intensive trade. You got to be, get your order in, get your stop in, put your exit in. Obviously, I don't take them all the time on the webinars. I try to get on as many as possible. This may work, but I'm not messing with relative volume. So the disqualifiers are heavy relative volume and or heavy footprint bars that you're breaking out of. Today, it's going to look different because the volatility is so high. I just explained this to my room the other day. When you get the ATRs between 3 and 6, 30,000 is a lot. I'm using a 10-tick reversal bar. 30,000 is a lot in ES. But you can see here, like you saw this heavy relative volume. When you look at this, you're like, well, this is only 10,000. This is only 19,000. Well, yeah, because the ATR is 11. So this is not going to be relative today. You see what I'm saying? But the point is, you don't want to be taking reversions. Say you got the event here, and you got the 1, the 2, and the 3 reversions. As it's breaking above all that volume, you're very likely going to get run over. There's plenty of reversions that you can take without messing around with this kind of volume that it's breaking above or below. See what I'm saying? All right. Yeah, I'll you're in my room too, so I'll explain it more. Just ask on the webinars in my trade room, which I do every day, guys. Try to do it twice a day. I missed the first morning webinar ever on Monday, besides me being sick with COVID, because it was the worst trade I've ever seen. I missed the morning and the afternoon. I had a guy come in the room, he joined on Friday, and he quit on Monday because he even put in 0 webinar, and you could see he was like typing hard because he hit like a extra key. Like he was mad that I didn't do webinars. Guys, part of trading, part of being a successful profitable trader is knowing when not to trade, right? I'm not going to sit and I offered a Q&A session, that's fine, but I'm not going to get on and just throw on trades just to throw on trades like that. So that guy, he quit, like he was in there for 2 days and he quit the room. It's like, all right, dude, you're lost. So, I don't miss webinars often, and never in the morning. That was my first one ever. Afternoon's a different story. If there's nothing going on and I make no trades during the day, I'm not going to just sit there and talk to myself because I get little participation anyway from my room. They get verbal lashings about that anyway. But if I trade and I see something, and I do offer Q&As, if people vote, yeah, I want a webinar to do a Q&A, then I'll get on. But other than that, guys, I'm not going to trade just to trade. That's asinine, right? All right, that's it. I think we're going to do a webinar next Thursday because it's the day after Christmas. It'll probably be dead. But like I told my story, this story a couple times in the room last week. When 2004, I thought it was going to be dead. This is when I got married. We set our honeymoon for the week after Christmas, right? Like, I was going to be dead trade. It was the best. I just filled on my back in black and gold. That's delightful. But I'm still short some of those. But I got out of some down here earlier. But the point is, I'm gonna schedule my honeymoon for the last week in December. The trade was insane, and this is probably going to be the same type of year, right? Because everything's going down. You're probably going to get really good trade all the way through the new year and then into it. So I told my wife, I'm like, well, if we go on this vacation, I'm probably going to cost myself $200,000 to $300,000 because I could just tell by the way it was trading, right? So she said, well, fine, then we'll postpone it. Still haven't taken it, but we postponed it, and I made $300,000 that week. So the point is, you never know when it's going to be dead. So I have a feeling it's going to be really good trade. It's not a feeling. I'm not Nostradamus, right? It's probably going to be a very good trade going the rest of the year because of what's going on. So anyway, my point is, I think we're going to have the Bookmap webinar next Thursday. It's the day after Christmas. So I will see you guys then. Sorry for all the jibber jabber. Hopefully you guys are learning what drives markets. I'll see you guys.